America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That is Emily Grafeo in for Carol Massar. I'm Tim Stenivek. Carol is out today, and we know pretty much nothing happening right now in the markets. I think it's fair to say, Emily. You're a cross-asset reporter for Bloomberg News. There's a story in the bond market, but in the equity market, is anything going on?
No, we're basically unchanged on the S&P 500. Maybe Abigail Doolittle will have something to say under the hood, but unchanged on the S&P and also unchanged when you look at the 2-year in the bond market.
Hey, we got some individual stocks making big moves today, and that's certainly going to be the focus of our program. GM right now up close to 10%. We're going to be checking in with Keith Naughton a little bit later in the program, talking about the company's high prices, boosting profits, and lifting the low end of the 2024 outlook. We're also going to be joined a little later in the program by the CEO of John Hancock Retirement, Wayne Park. They're doing an annual financial stress survey. This is the 10th annual one, so we're going to get the takeaways from that. And then we got Amanda Gordon joining us a little later today as well. Democratic donors are deploying a Moneyball strategy as an attempt to tip local races. We got all that and more coming up over the next 2 hours on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie.
All right, thank you very much, Tim and Emily. We got 58 minutes to go ahead of the closing bell. The S&P lower for now, down 6, little change. Could see back-to-back losses on the S&P, down now by about 0.1%. Dow Jones Industrial Average just about unchanged on the day, up 2 points. We've got the NASDAQ Composite Index up 16, now a gain there of 0.1%. 10-year at 4.19% with a 2-year 4.03%. Gold up $24 the ounce, $27.44 on the precious metal, up 0.9%. And West Texas Intermediate Crude seeing a sizable move there today, up 2.2%, $72.09 for a barrel of WTI. Wall Street is paring back bets on aggressive policy easing as the economy remains robust, and Fed officials have sounded a cautious tone over the pace of future rate decreases. As for the Fed, Cameron Dawson is Chief Investment Officer at New Edge Wealth.
You're now having the Fed talk about potentially hundreds of basis points of cuts to get back to this phantom neutral rate, which would effectively be like throwing lighter fluid on a fire already of this underlying strength within the economy. So it raises the question of, if we actually get these kind of deficit blowouts, do you get as many cuts as the Fed or the bond market has currently priced in?
And Cameron Dawson was interviewed this morning on Bloomberg Surveillance. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. GM shares, as Tim mentioned, up now by 10.2%, surging after signaling solid U.S. demand for its highest margin vehicles. More on the auto industry coming up shortly here on Bloomberg Business Week. Ford shares up 2%. Stellantis, parent of Jeep and Chrysler, up 1.4%. Tesla, though, in the red, down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Worth repeating the numbers that we're seeing on the screen right now. The Dow is flat, the S&P 500 down 0.1%, the NASDAQ higher by 0.1%. Let's see if Abigail Doolittle thinks anything is going on in today's trade. She's markets correspondent for Bloomberg News. She joins us here in the Bloomberg Interactive Brokers studio. Equity market. Are you snoozing a little bit?
It's a little meh.
Yeah, a little meh. It can be. Everyone's got days like that.
True. The one soup that might stand out if the S&P 500 stays down is it's the second. It'll be the first time that we've seen 2 down days in a row since early September.
Well, that's a huge story though, because look what's happened since early September.
Yeah, because we've had this 6-week rally, and then if it does happen, and we don't know that it will, because there's still some time, obviously, to the closing bell. Will it be a turning point of some sort for a move back down into some kind of a range? Trend shifts, near-term trend shifts tend to be pretty sneaky. So a lot of ifs there. I think that the big event that we're waiting for is the election. You know, what's interesting is that for this quarter, for earnings season, we've been talking a lot about how it's relatively muted, 3 to 4% growth. What's really interesting to me is the quarter prior to it, I think the year-over-year growth was 12%. The quarter after it is 10%. So it does seem as though analyst management teams have been guiding, even then landing on a little bit of a muted quarter on a sequential basis, maybe having to do with the election. This is really interesting because I don't think a lot of people are talking about it. I mean, Delta is, United Airlines talked about it, but when you see that in a bar chart and you see all these good quarters of growth, but there's this one quarter where it's not, I think that the election and also the Fed, I mean, there's uncertainty around the Fed. Now the Fed's expected to cut a little bit less than before, but I think that we're right now waiting on the election and then the Fed, which, it's going to be a crazy week.
Yeah, we just spoke to the
from now.
CEO of Aspen Technology. They're a company that works with huge industrial companies like oil companies, minerals and mining. And the CEO told us that the uncertainty there is uncertainty with customers around the election, but it's more with rates. That's what they want to know what's going to happen with rates.
So that's interesting. Then maybe in terms of the correct guide to significantly lower growth in this quarter relative to the 2 quarters or couple quarters surrounding it has more to do with that rates. I tend to think that it's a little bit of both. The way that the election, based on a number of our guests who have been joining us, Francis Stacey Newton last week comes to mind actually. I think Francis Newton Stacey, want to make sure I get that in the correct sequence, but that only if there's some kind of we don't have a result right away, that contested election, that would be an uncertainty that frankly is not coming priced in. I mean, if we take a look at the predicted odds that we've been following since July, essentially, at this point, it's looking relatively certain with the former President Donald Trump a good 10% ahead of VP Harris, although on another one of our competitors here on this big screen of TVs that we have here, there's a poll with Trump, I think it was at 50% and Harris at 48%, so much more narrow. So we really don't know. That is going to be an interesting piece of something ahead to
Josh Green, who we spoke to earlier, who columnist for Bloomberg Business Week, Emily, he brought up the idea that even the internal polling that he's been privy to at the campaigns has been as close as what we're seeing publicly.
He told us that we're not going to know who the winner is the morning after election day. He said it might take a couple days, actually.
Well, it's interesting. I don't feel like that's news. I feel as though that's actually baked in. I think that so in 2020, we knew on Saturday after the Tuesday. So I think that it's sort of baked in that it could be something similar to that. I think that, contested election, that if it drew out for, weeks and weeks and weeks could be an issue. So, yeah, it's exciting. I mean, we don't know.
But you're not...
Exciting is one way to describe it.
Right. But should traders be nervous that not enough uncertainty is priced in? Like when you look at volatility markets, when you look at the VIX, is it eerily calm?
I don't think it's eerily calm, and actually traders are telling you Trump's going to win. The Trump trade in many different forms, whether you look at DJT or if you look at those predicted odds or you look at the crypto version of it or if you look at stocks that are linked to Republicans versus stocks linked to Democrats.
EM currencies.
Yeah, traders are very much saying that Donald Trump is going to win.
What else is on your radar, Abigail, when it comes to the company level?
So I'm watching it's interesting, the best performing stock for the S&P 500 on a percentage basis is GM, up 10.4%. I think it's the best day since 2022, the last time I looked. They, of course, put up a good quarter. Profits grew by more than 30%, sales by 10%. EVs grew by 60%. So that really flies in the face. It wasn't so long ago where we were receiving reports of car sales maybe being in the doldrums because of credit and that there were issues with delinquencies, but apparently these high-priced cars are flying off the shelf. Then on the other hand, the worst performing stock on the S&P 500, one that admittedly I'm not that familiar with, but GPC, Genuine Parts, it's a car parts and automobile parts company, plunges after quote-unquote very weak results. So we continue to have these bifurcated results. It seems to me as though there's not just one economy here. There's different levels of the economy, and we're just tracking to see where people are floating.
Is that one on your radar today?
For my
car.
car.
Like car parts.
Car parts?
Yeah, down close to 20%.
I mean, I'm going to be looking at General Electric. Biggest intraday drop since April 26, 2022, down almost 10%. What's going on there?
Well, that was a miss on the sales, coming in a little bit light. I think that the big thing happening there is not only is it a miss, but they are continuing that sales guidance forward for some weakness, saying that they basically held sales flat. They guided profits, supply chain issues. But the point I would make here around GE is, even with today's plunge, it's still up a very, very robust 74% on the year. So it was priced to perfection. They missed a little bit. They're saying that it could affect the future, and investors not liking that.
We were on air yesterday when SAP earnings broke. Shares higher right now by more than 1.4%. These are the ADRs that I'm looking at here in the U.S. that are traded in the U.S., Abigail. What are you watching when it comes to SAP?
AI, and AI.
Is that it?
What is that?
We've heard that before.
Should we Google AI?
Yeah, is that what it's all about?
I mean, it appears to be that the AI tools are helping give, some additional cloud sales. It's funny, it's funny because this is definitely a little bit of a bias from having been on Wall Street and watching analysts and watching strategists and having done some of that work myself in the past, that when it's a stock trades higher like this and everything is sort of put on one thing, there's a tendency to believe it. But say that they missed and it was because AI didn't contribute, then some of the thing would be, oh, they're blaming it on AI. I mean, I have to believe that if
So
they're
it works
saying,
on the upside, but not necessarily on the downside?
well, I think that there's more questioning on the downside. I mean, having seen a lot of different scenarios, especially back in the tech bubble, when companies, like, for 2 to 3 years, they simply could not meet the guidance that they were giving, even though they lowered it quarter after quarter after quarter. Often, I mean, for me, the classic was EMC. I think it was maybe the summer of 2001. Pre-announced to the downside once again on a Friday summer, afternoon. Like, who pre-announces on a Friday at 5 o'clock? But that was one of the tricks that I saw at that time period. And then they, coming up with blanket statements like, it's this, it's that. But you really need the analysts to go in but the analysts here do seem to think that it's AI.
We saw Boeing make an announcement almost 2 Fridays ago when it came to a big round of layoffs.
Yes, they did make that.
On 5 o'clock on a Friday. Or a little earlier, but the market was closed.
So that announcement seems smart to me from the standpoint that, that you have so much negative news already priced into Boeing, but that's also negative news that impacts people's lives. And so to to give that information so that investors are then going to have 2 days to digest what it really means and analyze the fact that it was actually Kelly Ortberg in some ways putting a shot across the bow to that union. You better get back to the table because I've just fired some of your union workers. They're not immune from this. I think that it helps stabilize the stock. And by the way, they also pre-announced so that they could then do the equity shelf, and now this intended equity raise of $15 billion. And, the cherry on the cake, I don't want to, hopefully this will happen, but, it's very strongly expected that tomorrow they're going to hammer out that deal with the union, the 35% raise over 4 years, other factors, no pension plan, most likely is what most experts are saying, including George Ferguson, but they will likely get the 401k match.
Can we go back to the macro, Tim?
Go back to the macro.
Well, I don't know if you guys had talked about this yesterday with Carol, but over on the print side, everyone was talking about David Kostin's
we talked about it a lot
from
yesterday.
Goldman Sachs.
Yeah, that's an interesting one.
John Authors joined us on our program
And to talk about
it.
So his forecast was over the next 10 years, I think it was 3%.
Yes.
Annualized returns.
It's basically a history-breaking call because I looked at the S&P 500 from the bottom of the Great Depression to the tech bubble, and it was up, gosh, I wish I had it in front of me. I want to say 37,000% or something absurd like that over that time period.
Yeah.
Then between 2000 and the end of 2009, it was down, I think, close to 30%, having to do with those two bubbles and busts, and the bust of the bubbles. And then between that low and now, I believe the S&P 500 was up more than 300%. So what that they're talking about there, really, to the best of my ability to determine, has actually not happened.
Right.
In the 70s, you had a lot of up and down, up and down. And the other peculiar part of that call to me was, if they were basing it on the economy and the corporate profit outlook, because ultimately that's what stocks are going to trade off of, or like a really restrictive policy from the Fed or some other macro factor, it would make more sense. But to say, well, we think that investors are going to be more interested in treasuries than stocks, it's a little bit of a head scratcher. For such a big headline and such a big call, I feel as though maybe it needed to be a little bit more robust. And now JP Morgan, I saw today, there's a nice note on the terminal talking about how they're saying the opposite. They think the S&P 500 is going to be just fine. But that's what makes a market.
I was going to say, that's what Carol always reminds us. That's what makes a market. Okay, we talked the election with you, Abigail. Very briefly, we have 30 seconds left. What else is on your radar?
The dollar yen, funny enough, I think the dollar yen is poised, and this is coming from Carly Garner and over at DeCarly Trading and Eric Dugan at 3D Capital Management. Both of these individuals have said that they really think that we could see some weakness there, and that could really set off the unwind of the yen carry trade again, which could pressure risk assets. So stay tuned. Abigail
Doolittle, markets correspondent at Bloomberg News, joining us here in the Bloomberg Interactive Brokers studio. Taking a look at the major indices, the S&P 500 is still down, but barely. Dow is up 0.1%, the NASDAQ up 0.2%. Qualcomm hosting its annual Snapdragon conference this week. The company unveiled a more powerful processor that's designed to bring laptop-level capabilities to smartphones. Let's go now to Ed Ludlow and Romain Bostic, who are standing by with Qualcomm CEO Cristiano Amon.
Yeah, welcome to our Bloomberg television and radio audiences around the world. We're joined by the Qualcomm CEO, Cristiano Amon, who's live in Maui from the Snapdragon Summit. And I think chief among what you're talking about is Snapdragon 8 Elite, right? And the technology shift is to the in-house design processor. But the question for you, Cristiano, is the same as it's been for quite a long time, which is what is fundamentally different through this processor in how we use our smartphone, the capabilities that an AI smartphone has?
Very good, Ed. Hello from Maui. Good talking to you. We're incredibly excited with the announcements we made yesterday, and we have more announcements today. This is our 9th edition of the Snapdragon Summit. And what's more exciting about what we're doing with 8 Elite is going to be the Snapdragon platform that does two things. With our new custom Orion CPU, it restores the leadership position in performance to the Android ecosystem. Smartphones powered by the 8 Elite are going to be the fastest smartphones in the world, period. But that's only half the story. The other part of the story, it is the platform that has incredible computing capabilities for AI. And we present a vision of the future, how the construct that we are used to in the smartphone of OSs and apps and app stores are going to fundamentally change as we have agents that are going to do a lot of the use cases for us. One of the most exciting things for Qualcomm of generative AI is that now computers can speak the language of humans. And that's where we are. There's a Snapdragon, there's a display, there's a human.
Right.
And that transition is about to happen. So we built a platform for that.
The forecasters, Cristiano, see the smartphone market growing, driven by Android. And what surprised me about this generation of processor is you get them into handsets quite quickly. Have you done the math on how you see that convert into market growth, how quickly the AI smartphone is a top-line driver for you?
Look, that's the multi-billion-dollar question. So I'm going to try to give you an answer, even though it's very hard to predict. I think it's very easy to see, and I have conviction in that. Within the next 5 years, we're probably going to have all of us with an AI smartphone. The problem is you have to wait for the new use cases to come up. It reminds me of the transition from feature phones to smartphones. When in the beginning, we talk about apps. We have 10 apps, then became hundreds of apps, then thousands of apps. And we started to see that happening right now. We have like 20 AI different use cases, and maybe that's going to become 100. So I think we are on a trajectory to get to that point. Maybe 5 years is where that transition will be concluded, and hopefully what we all expect to see is the smartphone market is going to grow, and we're going to see a new upgrade cycle.
When we talk about, though, the growth in that market, Cristiano, are we talking about new entrants into that space? And I'm talking on the customer side here, or is this simply converting the existing customer base that's already out there?
I think the typical answer that you're going to provide to this question is you probably expect existing players in the smartphone world to just build AI-capable smartphones. But it's really hard to predict. Every time we have a change in the industry, I think the mobile industry is one that every generation of wireless players did change. So that could happen too. I think what we're really excited about it is actually not really the players, but how the experience is going to change, how the devices are going to change, and that's going to require a lot of computing power for AI, and that's what Qualcomm's going to do. Qualcomm's really been positioning itself to be the company doing AI at the edge, and that's not only phones, it's PCs, it's cars, it's smart glasses, and I think that's the story of the company right now.
With regard to that story, and I'm almost asking this question on behalf of investors, and I would like you to answer it for investors. To a certain extent, this stock has been left behind with regards to the AI focus that this market has had all year long. Does these new chips and the new products that they will go into, will that change the narrative to the upside for investors on both the top and the bottom line?
Look, I have a slightly different opinion. If you look where the valuation of the company is right now, we're starting to get credit for the fact that we created new growth markets for Qualcomm beyond handsets. You know, the stock had a lower multiple in the past because most of our revenue, and it's still a number one business, is mobile, and mobile was not growing. But what we have done is something different. We realized there are new end markets for our technology, and we build an automotive position. I think the Snapdragon digital chassis now is the key asset for the industry in automotive. We have a $45 billion contracted pipeline. 1/3 of that is ADAS and autonomy. We entered the PC space in the transition of PC to Microsoft Pilot Plus AIs, and we're going to start building industrial. So actually, we have been building new business for Qualcomm, and that has had a positive impact on our multiple. With that, this AI transition is about to happen from the data center to the edge, and we're just preparing ourselves for that.
In the smartphone context, what's happening in China is so interesting. Let's compare with Apple, right, in the iPhone 16. They're being rewarded in that market on Apple Intelligence features that aren't yet out in China and won't be for some time. So when you think about Snapdragon 8 Elite and your kind of first mover advantage, do you feel you have a first mover advantage in China when it comes to the AI smartphone?
So let me talk about our smartphone business in China. We have been powering the premium devices of all the Chinese brands, companies like Honor, OnePlus, Oppo, Vivo, Xiaomi. And what we have seen, the China internet is a different ecosystem. All of those companies has been creating AI use cases. And what we see in China that we like, the market has stabilized it, but we see consumers moving up. So while the market doesn't grow as much, what is really growing is the premium tier. Consumers want to buy a better device. And what we have seen this year over year. So we're actually happy with our position in China. And, you know, as we go into other markets, we're seeing our partnerships in China increasing. One of the examples, we're now partnering with every single Chinese EV company as well for automotive.
Cristiano, you're dedicating a day to those new chips in automotive. One of the questions from our audience is whether that's now becoming an isolated business, or if there's a kind of flywheel effect through the diversification efforts that you kind of were helming.
So thank you for the question. Right now on stage, we're announcing the most powerful processor we ever done in the history of our company, which is our new platform for automotive. We're announcing two chips, is Snapdragon Elite Cockpit and Snapdragon Elite Ride. And that is being designed for what we believe is going to happen with software-defined vehicles. Cars are going to get better over time. It is future-proofing the AI capabilities for Gen AI use cases when you're behind the wheel. Just as an example, is a 12x increase in performance versus the prior automotive chip that we have. It's an order of magnitude increase. And I think the way we look into this is we build a strong automotive business by being the digital platform of choice for all the car makers. Now we wanted to future-proof that platform for the future Gen AI use cases running on cars at the edge.
I've got to ask you the tough question here, Cristiano, and that's really about your ambitions to grow this company and expand it through acquisition. Of course, you've seen the media reports about your interests, your presumed interest in Intel. Do you have any intent on pursuing that deal anytime this year?
Lately, I'm getting this question all the time. Look, we don't comment on rumors, but I'm going to tell you what we're actually busy doing. What we're busy doing is we have a unique opportunity for Qualcomm for the PC space. We saw the entry point driven by two transitions. One transition is mobile PC conversions. The other one is PC becoming an AI platform with the Microsoft launch of Copilot+. So what we did, we built the fastest processor platform, which is X-Elite, and right now it is still the fast performing processor. Both the incumbents in the PC,
Right.
Based on our announcement, created new products and accelerated the new products to compete with us, and that wasn't enough. So we see now an incredible opportunity for us in the PC, and especially as PC makers have questions about their future, they look at Qualcomm as a great player.
Cristiano, the interest on the whole Intel story was because you made progress on your own, ARM-based processors, Qualcomm processors, so why x86? Just give yourself a score out of 10 on how you did on AI PC so far.
Look, given the amount of skepticism that we got about people telling we will not succeed in PCs and would not be able to compete, I'll give us a very high grade. And the platform design traction is awesome. We launched 22 different laptops across all bands: Dell, HP, Lenovo, Asus, Acer, Samsung, and we continue to see design traction, especially as Microsoft prepares a transition for Windows to an AI. And one thing that we were tasked by Microsoft to do, and we did it, we restored the performance leadership of computing back to the Windows ecosystem. That's a great testimony of, I think, the Qualcomm engineering capability and our focus in growing this business.
There would certainly be a complement, though, to getting at least some part of Intel's business, whether it's the programmable chip division, which we already know that Intel has plans to try to spin off, and other aspects of that as well. Do you see a complement there at all?
Look, it's important to understand the Qualcomm strategy, and we have been very clear about that. Our strategy is pretty simple. We define our company, we have three assets: everything wireless connectivity, and we take pride in being the #1 in cellular and Wi-Fi on everything wireless, high performance, low power compute, and artificial intelligence for the edge. And what we did, we applied those three technologies to all markets that are growing, and we could leverage our technology for phones. So we went from phones to cars to the PCs, and now industrial. And that has been part of our strategy. We did all organically with some of the small acquisitions. We feel we have a very competitive roadmap, and we're thinking about the new. What is the new innovation that is coming for those markets? And that's what we're driving. I will remain focused on that.
Cristiano, the Qualcomm of today is very different to the one that I first met 6 years ago. When I speak to investors and analysts, they do worry about kind of billions of dollars of lost revenue, particularly with key customer Apple and modem. But the question I get a lot for you is whether these kind of newer business lines, Snapdragon 8 Elite, the automotive side, account for, make up for some of that lost legacy business going forward from 2025.
Look, I love answering this question because, that has been the story of Qualcomm of the past. Every investor saying, look, you have the best modems in the world. You have a very strong position with Apple, but, they're eventually going to do their own modem, going to lose this business. So we took a completely different approach. When I became CEO, I had an investor day in 2021, and we said that revenue is going to be removed from the model. And we are going to be creating new growth markets for Qualcomm. And we have a much bigger SAM opportunity than we have with mobile. We're just executing on this. And the results are showing. Look, $45 billion of contracted pipeline in automotive is not a small number. And you have seen in our earnings results, automotive has been record quarter over quarter because we're gaining share. That's the reason we are getting to the PC. That's the reason we're getting to industrial. Because at the end of the day, it's not only about this one customer revenue, whether we have it or we don't have it. Yeah. It's actually, can we operate in growth markets and expand the company's SAM? And that's what we're doing.
And this is exactly what we've heard from investors, exactly what we've heard from analysts. They want to see that diversification. And just to be fair, Cristiano, they've given you a lot of pats on the back so far. There's still a long way to go. And I do want to circle, as we end this conversation, back to the automotive space, because we've been focusing a lot on that today on this show. And there are concerns here that we've sort of reached some sort of bump in the road with the adoption of new vehicles, whether it's EVs or autonomous vehicles, or really just vehicles that are much more sort of technologically inclined. Where do you fit into that space longer term? Is that going to be a bigger market? And more importantly, is it going to be a bigger market for Qualcomm?
Very good. So, look, Romain, one of the unique things of our automotive business, we are kind of immune to that. Our position is not dependent on electrification or internal combustion. Our position is not really dependent of the shifts that you have in share across different companies. Because what we have done, we saw the cars are going to become digital, digital computers on wheels. Car companies are going to become tech companies, and we built a platform for the car companies. And what happened is that had resonated well. So we're designed across all brands, all the Koreans, all the Japanese, the Europeans, the Americans, the Chinese. Every single car company now is using some portion of the Snapdragon Digital Cockpit. And what is happening with our results have been independent of the automotive market and more about gaining share. And as the new cars come out with our platforms, we're starting to see that go into revenue. We made a projection of $4 billion by 26, and then $9 billion by the end of the decade, and we're tracking that.
All right, Cristiano, we have to leave it there. We always appreciate your time. Of course, out there in Hawaii, the CEO of Qualcomm, Cristiano Amon, and our very special thanks to the co-host of Bloomberg Technology, Ed Ludlow.
Well, there you have it. Bloomberg Television simulcast with Ed Ludlow and Romain Bostic, Cristiano Amon, out there in Hawaii. Qualcomm CEO refuses to comment on that Intel acquisition report, says that the new market's built on organic capabilities, and also saying that China has stabilized, not growing. Some good headlines out of that interview with Cristiano Amon. Well, speaking of shares moving, General Motors shares higher by more than 10%, having their best day in more than 4 years. The company signaled solid U.S. demand for its gas-powered Yukon SUV, the Chevy Silverado pickup, even as the broader market softens. GM shored up its 2024 adjusted earnings before interest and taxes forecast to at least $14 billion. That's up from the minimum of $13 billion it had previously projected. Watching these numbers closely is Bloomberg News Auto reporter Keith Nunn, who joins us now from Detroit. Keith, good to see you. Investors certainly cheering the results we got out of GM. What worked well for them this quarter?
Well, they're making a lot of money in the home market with their traditional vehicles, with, gas-fueled pickup trucks and sport utility vehicles. And that's helping to offset losses that they have in electric vehicles and losses that they have in China and losses that they have with their autonomous unit Cruise. So they're selling a lot of traditional vehicles at high prices and high margins.
Who's buying these vehicles? These cars, I mean, they're not as expensive as the EVs, but these are expensive cars now.
Well, for sure. I mean, cars average almost $50,000 these days in price, and interest rates still remain sort of stubbornly high, though the Fed has begun to lower rates that will hopefully pull down car loan rates. But the American consumer, at least in GM's experience, is remaining incredibly resilient and continues to buy really well-outfitted cars, which is, driving profits up for them. And, they, as you said, they raised their guidance. It's the third time this year that they've raised guidance. They've beat earnings estimates for 7 quarters in a row. So consumers have not stopped buying cars.
So is this more a story about the resiliency of the U.S. consumer in general, or is this a GM-specific kind of, optimism?
Well, GM is definitely outgunning its Detroit rivals, Ford and Stellantis. Neither of them have beat estimates 7 quarters in a row and are not raising guidance. So, GM is doing especially well. But what new car buyers are buying these days are more well-outfitted cars and larger cars that have higher sticker prices, and that has driven up margins. Everybody is expecting pricing to soften because inventories are finally replenished after, the shortages of the pandemic era. But still, consumers are paying up for new wheels.
Hey, we got 30 seconds left, Keith. I'm going to go there. EVs. How ugly is it for GM?
Well, it's interesting with GM, Tim, because they are coming out with lower priced EVs like the Equinox, and those are really resonating because, they're not too expensive. So, GM is having some success with its EVs, and Mary Barra, the CEO, said they're going to reduce those losses on EVs substantially next year.
Keith Naughton, Bloomberg News auto reporter, joining us from Detroit, Michigan. Keith, thanks for joining us. Always good to see you. General Motors shares higher by 10.3% as we speak. Taking a look at markets, the S&P 500 pretty much flat right now, though it's in the green. The NASDAQ up by 0.2%. The Dow higher by 0.1%. Coming up next on Bloomberg Business Week, we're going to drive to the close with the head of wealth management research and strategy over at Morgan Stanley. That's next on Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go until that closing bell clangs on Wall Street. Little change on the S&P, the Dow higher. We've got NASDAQ higher as well. But with all the details, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are well off their opening lows, with the Dow currently up 51 points. Like you said, S&P is our little change, while the NASDAQ is higher by 0.2%. The U.S. 10-year yield at 4.20%. Gold is higher by 28. Oil is climbing, but Bitcoin, that's down by 0.3%. Among the main 11 S&P sectors, leaders were consumer staples and real estate. Industrials were under pressure, and leaders to the upside in the Dow, Microsoft and Walmart, while Verizon fell 4.6% after earnings and led to the downside. Also after earnings, GM and Philip Morris each rose 10%, while Genuine Parts plunged 20%. That's the most since 2020. In the chip space, the Qualcomm CEO said that everyone will have an AI smartphone in 5 years. And in other news, Peloton partnered with Costco. Wrapping things up, some of the names reporting after the bell tonight include Seagate and Texas Instruments. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Wow, tick-tock, everybody. Less than 18 minutes to go until the close of trading on this day when the equity market is pretty much doing nothing.
The S&P 500 is up 0.02%, which I guess we can call unchanged.
Yeah, I think that's fair to say. Let's see what Dan Skelly has to say about this. He's head of wealth management, research, and strategy over at Morgan Stanley. Dan, good to have you with us this afternoon. I don't want to talk about today's trade, at least at the beginning, because there's not much to talk about right now. Big picture, though, 2 weeks out from the election, got geopolitical concerns. What's top of mind for you and for your clients?
Sure. Thanks for having us back on the program. Happy to be with you. So look, in terms of our individual clients, they are hyper-focused on elections. They're focused on debt and deficits and the path of those dynamics in either election outcome. And they're also increasingly focused on what's going on in the world. So these are all certainly questions that we're getting on a daily basis. And then, of course, a little bit more in terms of our equity perspectives. Does the rotation from growth and Mag 7 to value that started in July and August, does that persist? These are some of the main questions we're getting.
And what about when clients ask you about the outlook for the Fed? Because we've seen a pretty significant move back upwards in Treasury yields, crossing 4% on both the 2 and the 10-year. What do you make of that, and what do you tell clients who are maybe concerned about inflation risks reigniting and a Fed that's not going to be as aggressive in cutting as we once thought?
Yeah, excellent question, Emily. And look, when you see that back up in rates over the last 4 or 5 weeks or so, we would say 80-90% of that initially came from the strong jobs data that we got in September. And then really in the last week plus, we've certainly seen, as you have, increasing odds in the betting markets around red sweep in the elections. And so that's been kind of the balance in terms of that move higher. Look, I would say if you're seeing higher rates because of some term premium being embedded in a red sweep, that's something certainly to focus on. But if you're seeing higher rates as a function of more resilient and stronger economic growth, there's not necessarily a catastrophic outcome to that. There's ways to actually, frankly, get on board with that from a value and cyclical equity perspective, which is something that we've been doing really for the better part of the last several months.
I wanted to ask you to expand on that, because I know you had talked about the rotation at the beginning of our conversation. So is it time now to completely exit out of the market cap weighted S&P 500 and go all in into equal weight, value? How are you thinking about, I guess, the details behind what the rotation trade actually looks like?
No doubt. And listen, it's a really important focus for us. And what we would say is, first, it's really difficult given a third of the market is in technology and a lot of that in the Magnificent Seven themselves. It's really difficult to exit completely because what you end up doing is you end up running tremendous tracking error and tremendous divergence risk, right, from the benchmark. So we look at it more as an idea of taking some overweights and profits and maybe going a little bit back towards neutral. That's the first point. The second point is we think that those sells or those trims can fund additions in financials, which we've seen really strong momentum since earnings began 2 weeks ago or so. Industrials, which we actually think works in either electoral scenario. I think both parties are focused on this trend of reindustrializing the U.S. And then lastly, the whole idea around the next sequence, the next phase of AI, maybe moving a little bit from semis and the tip of the spear more towards infrastructure, hardware, power, utilities, et cetera.
Hey, Emily brought this up yesterday, Emily, the Costin note. That's like everybody was talking about, right?
Yes.
The idea of big S&P 500 gains being over. This is the Goldman strategist, David Costin. We talked about this on the program yesterday. Dan, I'm wondering, look, this is what makes a market. People come out with what they think is going to happen. When you see a note like that or read about a note like that, what goes through your head?
So we are well aware of the commentary from downtown. And what we would say is, historically, anytime your starting point on values is this high, 21 times, you certainly have to give, I think, some credence, some respect to not taking too much undue risk. Having said that, I would say two additional things that I think are highly relevant. Number one, the index has changed tremendously in accordance with changes in the economy. This used to be an economy that was more cyclical in nature, more manufacturing and export driven. Today, it's more services, consumer, and digitally enabled. And with those changes, you've seen all the different changes to the index. And I guess that last point, right, to follow on, I would just conclude by saying the index should trade at higher levels than it did in the past. It doesn't mean it can grow to the sky, but it should trough and peak at higher ranges than it did in the past. I guess very last point, just looking at history as we've seen in the last 2 years hasn't been as effective. Inverted yield curves, the fastest Fed tightening in 40 years, a lot of historical indicators have not been as reliable of late.
So if you use this as a starting point, a valuation that's this high, I get what you're saying. So then what if someone comes to you with new money right now? How do you deploy it? Since there are many areas of the market that are expensive.
Sure. So excellent question, Tim. So we made some changes at the Global Investment Committee, the GIC committee level, just 2 weeks ago, where we said for incremental money, we like putting money to work in large cap value, as we've talked about, mid cap growth, which is a little bit what we would call higher quality part of the smaller, the medium size cap curve. And then we also talked about, frankly, adding a bit to hedge strategies. We see this as an environment where if index returns, particularly impeded by the Mag 7 and the growth kind of market cap weighted ceiling on values, if index level returns are somewhat muted going forward, we like the idea of hedge strategies where you can exploit some of the idiosyncratic disruption going on, some of the dispersion going on at a sector level, which, by the way, Tim, I'll just add, a lot of people use the Mag 7 as a crutch in terms of lagging their benchmark.
Okay.
Let's not lose sight of the fact that for the 70% of the rest of the index, you've actually seen wider intra-sector dispersion this year than you have in 10 or 15 years.
Dan, love it when you join us. Got to come back soon. We appreciate it. Dan Skelly, Head of Wealth Management Research and Strategy Team over at Morgan Stanley, joining us for our drive to the close. We do get a couple minutes away, 10 minutes away from the close here. Still seeing green on the screen, though not too high. The S&P 500 up 6/100ths of 1%.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better. Emily, if that's even possible.
I don't know.
Yeah. Just you got to take our Bloomberg audience survey. Here's how you do it. Go on over to youtube.com/Bloomberg Podcasts. There's a button over there in the profile. It's called Community. Click on that. And then there's a link right there. Click on that. You'll find the survey. It's hosted by our partners, Material. You can fill it out at youtube.com/Bloomberg Podcasts.
What are they going to be asking?
I mean, hopefully it's not less Tim Stenevec.
More Emily Griffeo.
More Emily Griffeo.
Bring her back.
More Emily, less Tim. Don't write that, please. It's okay. What's on your radar, Emily, as we get to the close?
Well, like you said, there is an election coming up.
I've heard.
In 14 days, is it?
Yeah, well, it depends on how you count, but yeah, 2 weeks from today.
2 weeks from today.
People are going to the polls.
Wait, what day is it? It's a Tuesday.
Today's a Tuesday,
Right,
yeah.
14 days.
Yeah.
Okay.
Yeah.
People are going to the polls, but before that,
Yes.
U.S. presidential candidates
That's why I said
are
depends on how you're
deploying-
counting.
Okay, are deploying unusual tactics as they try to get any undecided voters with 2 weeks out to an election that polls forecast as a razor-tight race in our own Bloomberg News's
Morning console poll.
morning console poll
Yeah.
also shows that that poll is pretty tight as well.
Oh yeah, no matter which poll you're looking at, everything but the betting markets are tight. On Tuesday, Republican nominee Donald Trump campaigning in Florida and North Carolina, Democratic nominee Kamala Harris taping interviews in Washington, D.C. President Joe Biden also hitting the trail to target one of his and Harris's biggest political vulnerabilities, high prices hammering households.
But we're also seeing maybe some more unconventional, we could call it, campaign tactics. On Friday, Trump is expected to record an interview with comedian Joe Rogan on his wildly popular podcast, The Joe Rogan Show.
I know you listen all the time, right?
His show has, 17.5 million subscribers. I actually, personally, those episodes are like 3 hours
They're
long.
so long. I wonder how
and
long
I
they're gonna
don't
go.
have the attention span
You could put them on
to listen.
higher speed.
Right, at 2x Joe Rogan. And 15.7 million on Spotify. And we're also just looking at some of these other events that a Bloomberg News article is outlining. At a roundtable with Latino leaders intended to focus on the economy, Trump laced his remarks with personal attacks on Harris, assailing her over the administration's handling of the border crisis. That was in Florida. And now Bruce Springsteen and the E Street Band performing in Baltimore as a part of Harris's campaign. Iconic rock star Bruce Springsteen endorsed Harris this month.
Yeah, so the celebrities are
state?
coming out. No, it's not a swing state. I don't know why they're doing I don't know what his deal is or where he's doing it, but I would not count Maryland as a swing state. Interesting to see different podcasts, right? We talked a couple of weeks ago about what Kamala Harris has done, the Call Her Daddy podcast. She did Howard Stern. She did appearances on ABC's The View, The Late Show with Stephen Colbert. The polls certainly say one thing. I think what's important right now is for the candidates to encourage the folks who support them to actually go out and vote.
Right.
There's an article in the Washington Post that just came out today that talks about a Republican advantage there. And Donald Trump has been doing a lot of encouraging to get voters to go vote early, to get his supporters to go and vote early. And he's also, there's some tension there because he's talked about in the past about not being a fan of, early voting or mail-in ballots and stuff like that.
Are there statistics that Republicans vote? Like, are more likely to go out and...
I don't know what they say this year. I think Josh Green raised a good point about a demographic that supports Trump, young men who don't necessarily have a history of getting to the polls.
Right.
So makes sense as to why he's going on Joe Rogan to try to get that demographic to the polls.
But apparently Kamala might also be going on Joe Rogan,
Yeah,
according to that
that's
Politico
what
article.
that's what the Politico report said. We'll have to wait
Maybe
and see.
I would listen to that one. I'd be interested how that goes.
Hey, I
'cause
will
he has
listen
some
to.
hard
I will listen to the
questions.
Trump interview. I will listen to the Harris interview, and listen to us coming up next on Bloomberg Business Week because we're going to be joined by our Bloomberg TV team. It's our cross-platform coverage: radio, TV, YouTube, Bloomberg Originals. We're going to count you down to the close. Bloomberg's The Closing Bell starts right now.
We continue to count you down to the closing bells. Stick with us. This is Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Fu, taking you through the closing bell, a global simulcast. It starts right now. Tim Stenovic in the radio booth, joined today by Emily Grafale. Carol Masser has the day off as we welcome our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube, on a day, Tim Stenovic, where I was told we were getting our first back-to-back decline on the S&P in 6 weeks. What's happening?
There's still a minute left.
Okay.
That could happen.
I jinx it?
Oh, hey, we're actually seeing stocks, the S&P 500. Oh, never mind. I was going to say it. Moving a little.
We're on the knife edge here.
You got to be fast.
Yeah,
Tim,
not really. The S&P 500.
Yeah.
I
What
guess
does
we can
Emily
go ahead and pretty
Grafale
much
think about
call that
this?
unchanged, guys.
Do you let her talk?
It's still green. It's not, I mean, I guess we could call it unchanged, but not a lot of, oh, there we go, an unch. Not a lot of action after the S&P 500's best
minute-by-minute,
6
second-by-second
week
update.
win streak.
It's like a
Not a lot of action in the bond market today either, given the big moves that we saw yesterday, right? The 10-year yield got to 4.21%, and there was talk that maybe we've gotten to the point where rising bond yields are starting to threaten stocks. That was the storyline yesterday. Maybe not so much today.
Yeah, and I love that too, because it gets to this idea that whatever narrative that you're crafting in your head today is probably going to have to be changed within the next 2 days. And this has really been the seesaw that we've seen now, right? For the last few weeks now.
Look at this, guys. 22.7% is what the S&P 500 has done so far this year. The fact that we've gone 6 weeks without back-to-back declines says something about the rally.
Yeah, I
That's
love
a grind higher.
I think the thing I love about that most, Tim, is that you included the 0.7%. You could have just rounded up to 20-30%.
Not yet.
All right.
End of the year. End of the year, I'll do it.
All right, EQT ringing the bell over there. And who is that? Oh, look at that. Cohen and Steers also ringing the bell there at the NYSE. The Dow Jones Industrial Average in the red on the day as we wait for these numbers to settle, but it looks like it's going to basically be unchanged on the day. We were just talking about those back-to-back declines on the S&P. It looks like as these numbers settle, we are going to be in the red, down about 3 points or roughly less than 0.1% here on the day. The NASDAQ composite higher on the day by 0.2%, as is the NASDAQ 100, while the Russell 2000 closes out the day lower by 0.4%.
All right, taking a deeper look at the S&P 500, pulling back the layers there as things get settled. 316 stocks did move lower in the S&P 500. 186 did move higher today.
We may, after all, get that first 2-day losing streak in 6 weeks for me. It's just for you.
I love it.
All right, let's take a look at the sector
even print
performances.
up the hat, Scarlet,
I know.
for this.
Well, don't print it up just yet. The consumer staples were the best performing group. That was led by Philip Morris. That group up 0.9%. Communication services and energy also finishing higher, but not by a whole lot. Industrials were your weak link with names like General Electric, Lockheed Martin, and PACCAR all down at least 4% on earnings. Materials also losing ground along with utilities.
All right, let's get to some of the gainers here. I want to start with General Motors. Shares surging today, having the best day in more than 4 years, up close to 10%. How's that for rounding up, Romaine?
I like it.
The company reported that they're just making a lot of money with gas SUVs and pickups, offsetting some other weakness. I know you got earnings that you got your eye on, Romaine.
Yeah, before we go any further, let's just get to Texas Instruments crossing the wire right now. The company is saying that third quarter revenue coming in at about $4.15 billion, and we're being precise because the street was looking for $4.12 billion. So a slight beat on third quarter revenue, a slight beat on third quarter EPS at $1.47. The street was looking for $1.37. Your forecast going forward, fourth quarter revenue, $3.7 to $4 billion. The top end of that range is below the average of street estimates. They were looking for 4.1, and their forecast for fourth quarter EPS, guys, 107 to 129. That's the range. The top end of that range, below the average of street estimates. The street, guys, was looking for $1.35.
And when you look into the business itself, let's just look at the analog revenue, $3.22 billion, beating the consensus estimate of $3.17 billion. Third quarter operating profit, $1.55 billion, also topping the average analyst estimate of $1.46 billion. Notable that the stock is down about 2%. There was a lot of talk, a lot of ink spilled about this idea that valuations were really lofty for this name, certainly higher than a lot of its peers. shares, given that AI is not the bulk of its business. The bulk of its business is in the industrial market, the auto market.
Yeah, and that stock is down about 2%, even despite the fact that the third quarter results were pretty good. Third quarter EPS beating estimates at $1.47. Third quarter analog revenue also beating estimates. And their operating profit for the third quarter coming in at $3.22 billion, which was also a beat.
I'm not getting a lot of commentary from Haviv Alan, the president and CEO of the company, in the press release. We're going to have to wait for the call a little later. But did note that the past 12 months they invested $3.7 billion in R&D and SG&A and $4.8 billion in CapEx, returning $5.2 billion to shareholders. Shares in the after hours down about 2%. All right, let's get back to some of the gainers as we await Enphase Energy results in just a few minutes. As I was saying, GM shares having their best day in 4 years. The company signaled solid demand for its highest margin vehicles, even as the broader market softened. Better than expected results for the latest quarter. They raised the low end of its full year profit. The SUVs and pickups that people are buying, the old-fashioned gas vehicles, offsetting weakness in China, EVs, and then in that Cruise autonomous driving division as well. Let's talk Philip Morris International, the maker of Marlboros. It turns out Zyn is so hot right now. The company forecasts higher than expected profit this year, soaring demand for Zyn nicotine pouches in the U.S. Biggest one-day gain going all the way back to 2008. Shares higher today by 10.5%. The company said adjusted diluted earnings per share will grow as much as 15% for the full year, excluding currency movements. That's up from previously 13%. And finally, I'm watching ADRs of SAP. Shares rising to a record. Revenue soared over at the software company. It's transitioning customers away from locally run systems with the promise of AI tools and analytics. Higher today by a little more.
What are you
than
looking
1%.
at there? What's on the ceiling there?
I'm
Is there
looking at
another
the
phone in
monitor.
the ceiling?
I'm looking.
That's where the gainers are.
Yeah, that's where the gainers are.
Oh,
They're
They
up
really
there.
have the monitors here.
So Emily will be looking
in the
down
radio
at the
studio.
floor. I assume.
Yes, exactly. Okay, well, I'm looking at three of the worst performing stocks in the S&P 500 today. Lockheed Martin shares fell 6.6%, the biggest intraday drop since March 2022 after its third quarter revenue missed expectations, pulled down by weaker aeronautical sales and ongoing issues with
Let me
its
just jump
F-3
in,
fighter
Emily,
program.
because we've got Enphase Energy share earnings coming out. This is the manufacturer of solar energy equipment. Fourth quarter revenue forecast missing analyst estimates, and this is the outlook of here. It sees fourth quarter revenue of $360 million to $400 million. Analysts were looking on average for $437 million, so that's a pretty big miss on that front. When it comes to fourth quarter adjusted gross margin, the company sees 49 to 52%. Analysts were looking for 47.8%. The stock is bouncing around a bit here as we report third quarter revenue of $380 million compared with the consensus estimate of $392.5 million.
Okay, let's get back to those decliners. Just finishing up on Lockheed, one of the other issues, bringing shares.
Sorry, I'm just going to
stock
interrupt you again,
down. Go
Gio,
ahead.
just for 1 second,
Nice try.
Emily. We're actually getting some preliminary results out of Starbucks. Those shares plunging in after hours trading right now. The company saying their preliminary fourth quarter comp sales down 7%. The street was looking for a drop of 3.5% here. So basically coming in worse than expected by a magnitude of 1/1. Fourth quarter net revenue, the company saying that will come in at roughly about $9.1 billion. Also saying that adjusted EPS will come in at 80 cents a share. The street was looking for $1.03. So a big miss here on comp sales, a big miss here on EPS and the bottom line. Not quite sure what the comparison is right now on the revenue side. Oh, there's your revenue guidance here. So 9.1 billion. The street was looking for 9.36. So Tim, a miss on the three key metrics.
Look, this is a company that has, you know, the challenges have been well documented. This is why they brought in Brian Niccol from Chipotle. They were supposed to report earnings next week, next Wednesday, on October 30th. So coming out with these numbers, the company does say it reflects a challenged customer experience. Management is developing a plan to get back to Starbucks. They'll provide insights into its plan during the fourth quarter and full fiscal year 2024 earnings call. Shares moving lower in the after hours.
And they cited both softness in North America's revenue and then also said that the preliminary fourth quarter China comp sales are down 14%, which was worse than estimates. So really, I guess, a global slowdown.
And I do wonder, Scarlett, whether this is kind of, we're getting into that sort of kitchen sink trend where a new CEO takes over. They look at all the bad things and say, let's just get this out there now, get it out of the way so they can focus on the future. Of course, one of the other headlines, Scarlett, of course, is that they're actually suspending their full year guidance guidance for 2025, which I guess shouldn't be too much of a surprise.
Yeah, I mean, it speaks to the idea that Brian Niccol wants to start with a clean slate here, right? He's going to set the terms for everything. And we should mention also that they are boosting their quarterly cash dividend to 61 cents. That's pretty much what analysts were anticipating, but he wants to kind of start fresh. He did make a comment saying that I've spent my first several weeks in Starbucks really listening to feedback from partners, engaging with the customers. Again, that idea that perhaps not that he gets a pass, but like he's not being judged here so much as the previous CEO because he's taking over and going to set a new path forward.
Look, he's got his work cut out for him.
Yeah.
And I think the term clean slate is a good way to think about it. By getting ahead of these results, he just took the helm earlier this month, so he's got the
work. But I mean, look at the hole that he's digging here, or maybe not he digging. I should say the Starbucks has dug here. Fourth quarter China comp sales down 14%, way worse than expected. U.S. comp sales down 6% here. So we're talking about their most important market, the U.S., and a market that, of course, they've really flailed in China, that they were trying to get some traction on. At least in the short term, it's not there.
Well, remember, his experience is really stabilizing U.S. businesses. I don't know that he did a whole lot with overseas businesses, but he has to tackle the biggest part of the market first for Starbucks, which is North America.
All right, guys, we're going to continue this coverage of the breaking news, not just from Starbucks, but earnings numbers as well. We got other big earnings coming up a little later this week. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, Bloomberg Originals. We'll see you guys tomorrow, same time, same place.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Emily Graffeo in for Carol Masser. I'm Tim Stenivek. Emily, how are you doing it? It's a little personal question, but, planning for the future, retirement.
Well,
how you feeling about it?
It's coming up in a few years, Tim.
What are you thinking?
I have my fixed income ready to go, and
I hope not.
No, it'll be a long time.
Yeah.
I think I'm in the Vanguard 26.
Is it on your mind at all?
Ridiculous year. Well, it is. I do. During the pandemic, I feel like when we all had time to kind of slow down and think a little bit about retirement, because I wasn't spending any money. I did get really into personal finance, YouTube.
Perfect.
So
I think a lot of people did.
Yes, this is like a passion of mine.
Okay, that's good.
Saving. I love saving money.
The advantage that young people have is that they're young and they have years to plan.
Right.
We know
so
what happens to markets in the long run.
Put all of their money in Bitcoin and just wait
for
40 years.
No financial advice from Emily Graffeo.
Yes, that was a joke.
The reason I'm asking you about this is because John Hancock Retirement is out with their 10th annual financial stress survey. We've got with us Wayne Park, the CEO of John Hancock Retirement. He joins us here in the Bloomberg Interactive Broker Studio. What I love about this survey is that you have a benchmark of 9 previous years to look at with the 10th annual survey. What sticks out to you this year? What's different about this year?
I think for this year, thanks for having me first. Because of the benchmark, we've been watching it over the 10 years, but this is the first year we probably broke it down by generation segments like millennials and Gen Z and Gen X like myself and boomers, and the results are different. Is probably not as surprising, but really interesting to look at.
Are you Gen Z?
Yeah.
Yeah. So this is great. We got Gen Z, millennial, Gen X, all represented right here. How's Gen Z doing?
Gen Z and millennials, actually, we had to combine together. Believe it or not, millennials, age 42, the oldest segment. But they're struggling, actually. When they look at their outlooks, they feel like about 50% actually of all respondents said they don't feel like they're on track for their retirement, which is a big number.
Why is this why does this happen in the U.S.? Is this because we moved away from a pension model and because the onus is on us? Is it because life has gotten so expensive that if you don't have money for rent or buying a home, you're not going to have money to sock away for later?
I think it's for 2 main reasons. One, I think the pension move away, that's been happening for a long time. So probably most millennials and Gen Zs for sure, they don't recall a pension and don't have an expectation to have one. I think the recency bias is on inflation, right? Everything just costs more. And the debt burden that most millennials and Gen Zs are probably feeling about their student debt is certainly a piece. But the other reason they feel probably down, which is kind of ironic, is the fact that it's good news. people are living longer, right? The life expectancy is closer to 80 now. So I think the recognition that, wow, I'm going to live longer, which means retirement is for decades, not any just few years anymore. So combination of good news, great, I'm going to live longer, but that means I have to fund that longer. And oh, by the way, it's costing me a lot, so I can't actually fund that in the short term.
What does the survey tell us about, how people are feeling and how that compares with their reality? Because I do feel like we talk a lot about, Bloomberg, about how sometimes how people feel about the economy is not actually the reality of like how healthy the economy is.
I think that's really true, so that's a good call out. What we see is how they're feeling about the economy and just retirement readiness overall is also different by generation. So Gen X, actually the worst feeling, probably because they're in the sandwich generation, right? They have to fund their own retirement, their kids' college. They might still have their own student debt still to pay for, maybe a mortgage. So they're probably in the worst category. But if you're a boomer, not to say anything, but they're closer. They see the realities. And if they're in a position where they're hitting their retirement target age, they're actually pretty confident. The other side of living longer for boomers is now they have to think about their healthcare cost a little bit longer. So a lot of concern more on healthcare and kind of life aspects. The other interesting that came out of this research is that while people recognize they have to work longer, right? That's kind of, hey, I'm living longer. I probably have to work longer to fund that retirement. When we survey the people that are out of the workplace, 60% of them said they retired before they wanted to or they thought they would.
Why do people do that?
It probably wasn't their choice, right? So it could be for health reasons, employment ended, right? So depending on where they were in the economy.
Which is a euphemism for getting laid off or fired.
Or maybe they went through the gig route. There could be a lot of reasons where you go to a different mode where you're actually not earning the amount of income, nor do you have access to a retirement plan.
Where does Social Security come into this?
We largely look at Social Security as a really important, one of the three legs of the stool, right? Three-leg Social Security. Typically for U.S., it's an employer-sponsored retirement plan, 401ks or other forms. And then there is a place for personal savings. So Social Security, of course, there's concerns. Is it going to last? So when you look at the longer life that we're all going to have, which is great, but then on the other end, I don't want to bring new facts in, but the birth rate in the U.S. is also going down, right?
So that's an issue for Social Security.
Exactly. That's why I'm bringing it up, because Social Security is not funded, right? It's based on the income levels and the taxation that of future taxpayers. So that's probably a more longer tail to kind of play out. But based on this study, I will say the green shoot is because we've been doing it year over year, this may not, I don't want to call it a retirement crisis, but there's definitely a check engine light on. But the light is little less red, meaning compared to last year, people are feeling less worse. I don't know if that's better, but certainly I think the inflation subsiding is certainly playing through in the responses that we're seeing.
We started the conversation talking about Gen Z and personal finance when it comes to younger people. Half of workers report being behind in their retirement saving. Only 1 in 3 feel like they are on track. What can people who are early on in their path towards planning retirement do, in these years to get ready so that they don't feel like that when they're trying to retire?
Yeah, I thought you gave it away at the very beginning, right? So for the younger folks, they have the best asset possible, which is time. So for the younger generations, get your budget planning in order, get your cash flow in order so that you can use that time in your favor and power of compounding, right? So save now over time. You gave it away.
Yeah, well, I mean, I can share from my own personal experience. Like I started my 401k in 2006. So what happened in, the great financial crisis? Everything crashed. You keep putting money in each and every year, whatever you can put in, and the compounding effect is pretty remarkable. I mean, I wish I could go back in time and put more money in because time is sort of the best thing we have.
That's what we hear from retirees that ended up retiring earlier than possible. And then the rule of thumb, right, regular historic equity market returns is that your money will double every 7 years. Wow. So people don't, if you put it in those terms, keep socking it away and it'll grow bigger than probably you would ever expected.
Wayne, good to have you with us. Thanks
Thank
for
you.
joining us. Wayne Park is John Hancock Retirement CEO. He joins us here in the Bloomberg Interactive Broker studio. I'm taking a look at what's going on with McDonald's right now. Shares are falling in the after hours, down 8.3%. McDonald's burger is linked to an E. coli outbreak. The U.S. CDC has issued a food safety alert about outbreak in Mountain West states linked to McDonald's Quarter Pounders. 49 people, 10 states have gotten sick, including 27 in Colorado. One older person in Colorado has died. The CDC says McDonald's removes suspect ingredients temporarily. Breaking news, shares of McDonald's down by 8.5% in the after hours. You're listening to and watching Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We are keeping track of a developing story right now, getting initial headlines. We brought them to you just a moment ago, but right now McDonald's shares, they're plunging after ours. McDonald's down now by 9.5%. The CDC has issued a food safety alert about an outbreak in Mountain West states linked to McDonald's Quarter Pounders. Now, the CDC says 49 people from 10 states states have gotten sick from the strain. That includes 27 in Colorado. There has been one fatality, according to CDC. Again, after hours, McDonald's right now plunging by 9.6%. Again, repeating the headline from the Bloomberg Professional Service, CDC issuing a food safety alert about an outbreak in western states linked to McDonald's Quarter Pounders. Starbucks moments ago has suspended guidance for fiscal 2025 while reporting same-store sales that fell 7% in the latest quarter. This, according to a preliminary earnings release after hours. Starbucks SBUX on the ticker. It is down now by 4%. Texas Instruments out with a lackluster revenue forecast for the fourth quarter, fueling concern the demand is still sluggish after an industry glut. After hours right now, we do have Texas Instruments TI trading a little change, down by about 0.2%. The Dow, the S&P, NASDAQ today, end of the session mixed. S&P right at the bell, down 2 points, down less than 0.1%. The Dow, a little changed on the day, down 6. NASDAQ, though, advanced 33, up by about 0.2%. 10-year, 4.20%. 2-year, 4.03%. Gold up 1%, 27.47 the ounce. West Texas Intermediate crude, 72.09, up by just about 2.2%. Again, repeating our top story, one dead McDonald's linked to an E. coli outbreak. More coming up here on Bloomberg Business Week. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. No question, it's a polarizing time out there in the U.S. Just look no further than the polls. Even people who disagree with one another historically, it seemed like could have more civil conversations. Maybe I'm just longing for the past, Emily, but it certainly seems things are more polarized now than
good anecdotal evidence.
Yes.
Absolutely. Even from just 10 years ago.
There's been some Pew Research out there too that kind of supports this also. What about when you get to the workplace? There's a lot of questions about whether or not you should talk about politics at the workplace. You should bring your whole self to work, which includes, everything. Gabriella Kellerman is Chief Innovation Officer over at BetterUp. It's a coaching platform that looks to help people boost their performance at work. So it's something she thinks about a lot in terms of, okay, who should we be when we're at work? She joins us from Berkeley, California. What do you think, Gabriella? Is work the right place to talk about politics?
Well, it's great to be with you guys today, and I'm glad you're shining a light on this because, of course, dealing with increasing polarization at work is one of the many challenges that makes this modern, very unusual world of work so difficult for all of us, facing disruption and uncertainty, and now add into the mix the stresses of leading teams that include people with exactly opposite political views. So our job is to help those folks be successful and to help their companies succeed and stay focused despite the polarization. That's what we've been studying since the spring, both in our historical data set with hundreds of thousands of employees and leaders around the globe, and also with the new prospective data set. We're watching in real time as that political tension mounts to see how it's affecting people and also to understand what we can do about it.
So BetterUp recently has put out some research about the impacts and potential solutions to political divisiveness in the workplace. Tell us about some of the most significant findings from this research.
Great. So the first and most significant finding is that there really is a cost to this. So this is not just uncomfortable, it is also expensive. We found significant productivity and well-being declines in advance of elections and peaking the week of election, both in 2020 here in the US and in 2022. And we see that same thing happening and recurring month by month today as well. We have calculated based on those percentage decreases and mapping it into Bureau of Labor statistics on the impact and the cost of that. It's about $900,000 per week of distraction per 10,000 employees.
Wow.
So for some of our largest customers, hundreds of thousands, millions of employees, you start to get into the tens, if not hundreds of millions of cost and distraction over the course of a single election season.
This is just election distraction?
Election distraction.
What about just like people at work on their phones looking at Instagram or something, not related to the election.
Well, exactly, and elections are just one example of political polarization, right? This is the year of the election, so the U.S. elections, of course, but there's elections around the globe distracting different geographies. And then, of course, all kinds of geopolitical events that threaten to pull us apart. It's quite expensive, and it's an ongoing and evergreen challenge in a way, even though we think of these as spikes. The spikes are spiking higher, and they're coming closer and closer together.
And yet, one of the other findings, I'm looking at the notes that you sent over, is that banning workplace political discussions raises team conflict by 35% and self-censorship by 23%, negatively impacting performance. So how are companies supposed to balance this? They don't want to completely, I guess, ban the discussion, but they also don't want their employees distracted. What is the solution here?
Right, that's right. And there are companies that have taken the stand of we just don't want people to talk about this at work. And we do see negative impacts to that. A huge part of what enables us to do well at work has to do with the feeling of autonomy, of agency. We want to feel respected as, grown, mature adults who can make decisions in our best interest about what we do and don't talk about at work. I will tell you that the number one factor we see in terms of determining the variance in stress that an individual employee experiences around political tension is actually their direct manager. So it's the manager that matters most in our data. It's how your manager is showing up. Is your manager mouthing off with politically charged comments? That's going to increase stress dramatically. Is your manager open to listening and expressing empathy for your experience as a human being, regardless of whether you agree with them on the political front? That will help alleviate tension. So we see that yet again, so much of what determines our well-being, our productivity in the workplace is actually that frontline manager.
Dr. Kellerman, can you talk to us a little bit about how to take this approach to our personal lives, maybe ahead of the Thanksgiving holiday? Yes, I'm thinking about that already, but I imagine a lot of people are going to, be in situations where this stuff might come up, and it can divide people, it can divide families. What's the right approach?
Yeah, so when we get into sort of the dramatic triangle of us versus them and this dehumanization of the other side, there's really not going to be a winner there. We have to kind of rise above that and get into more of a connected coaching mentality, which is where we're listening for what this person's experience is like. We're listening to be empathetic to them. We're looking for common ground. So one way out of the us-them dynamic is find a new categorization within which we're all the us, right? If it's Thanksgiving, we're all family. We care about the ones around the table. We care about folks who are getting older. We care about the young ones coming up. What are the topics we can find where we are genuinely emotionally connected to one another and genuinely feel like we are an us?
Dr. Kellerman, what about how offices, I want to go back to the workplace and then maybe we'll pivot back to Thanksgiving.
Yeah, go for it.
Or Halloween conversations. Go through all the holidays. But I'm also looking through just some of these other findings. Most employees want their organizations to stay politically neutral. I'm struggling to even think of what that would look like. What does an office, I guess a manager who's both respectful, but also, how can they demonstrate that they are remaining politically neutral?
Yeah, so let me give a little context on that finding. We looked at a lot of different factors that determine an individual's level of stress, and we found that the manager behaviors matter significantly. We also just asked employees, what do you want and not want your workplace to do that in the midst of these spikes in political tension, and what do you think would help? So these are employee preferences. They're one piece of the picture. Every organization is different. Every culture is different. Every CEO is different, as we've seen all over the news in the last few weeks. So you have to put all those pieces together. But coming through loud and clear in our survey on the employee preference, 70% of employees do not want their organizations to be taking a stand on the election. They want their organization to remain neutral. And that means really external facing. And again, employee preference. There's about 7% of employees who do want their organization to take a side. And then everyone else is sort of neutral. So you have what seems like a majority of employees that are expressing a desire for a boundary, and then other employees who are expressing, a different kind of a desire for a boundary, and how we manage, how we respond to all of those populations when we make a decision that's either going to disappoint the 7% or the 70%, how we manage through that matters, and it's an opportunity to then model some of those behaviors we're asking of managers. So again, on the manager side, things like listening, asking careful questions, being good at problem solving, which is an important skill that helps us navigate conflict. Those things help, they alleviate the tension. What hurts is any kind of acts of intimidation of the people on your team around these topics, politically charged comments. So there's ways of talking about the fact that you might have a lot at stake personally in the election, or you might be feeling stressed and tense about the election without making it an environment where it seems like your politics as the manager are the only way to go.
Does this stress end after the election? Does it end in 2 weeks?
Great question. No, as you might expect, it takes us a little while to recover. So based on historical elections, we see about a 6-month arc of decrease in well-being and productivity. And at the 3 months is where that election is. So about 3 months of buildup that we're watching in real time, and then about 3 months of recovery.
We don't have a lot of time left, but I can't help but think about how, we started this discussion talking about how it seems like the world is more politically charged conversations. How does social media, I guess, play into all of this? Is the reason why people feel like they're so on edge and they can't talk about these issues because people are constantly online and reading things online, and it's hard to then take the conversation into the workplace or, at family dinner?
Yeah, so I would say the research community is divided on this one. There's certainly a lot of evidence that social media can worsen things. There's evidence that there are other cultural generational factors in play. There's a host of explanations out there. Importantly, we do see political polarization increasing around the world. So this is a global phenomenon. It just happens to be particularly pronounced in the United States. One of the other theories that I think is worth paying attention to is social media, byproduct of it is we spend less time in real life, IRL, with real people, having real conversations. And, Malcolm Gladwell wrote about talking to strangers and the ways that just being willing to engage and have a conversation with people we don't know as well is part of what keeps us out of a tribal mentality and in a more open-minded approach to our society and our civilization. So getting out, talking to each other, spending more time in real conversation, being curious about
the old-fashioned stuff. Yeah, that 25% social disconnection of the workforce who felt distant from coworkers sticks out to me in your survey. Dr. Gabriella Kellerman, the Chief Innovation Officer over at BetterUp, joining us from Berkeley. This is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on McDonald's shares. After hours, major story involving MCD. McDonald's tonight, shares down 8.8%. U.S. Centers for Disease Control says McDonald's Quarter Pounders were linked to an E. coli outbreak in the western part of the U.S., sickening 49 people, killing one person. CDC says 10 people have been hospitalized, including a child. Again, after hours, McDonald's shares now trading lower by 9%. CDC says the people reported eating at McDonald's before the illness began and specifically mentioned having a quarter pounder. So again, repeating our top story, Centers for Disease Control says McDonald's Quarter Pounders have been linked to an E. coli outbreak in the western part of the U.S., sickening 49 people, killing one person. After hours, McDonald's shares down now by 9%. Starbucks has suspended guidance for fiscal 2025 while reporting same-store sales that fell 7% in the latest quarter. That according to a preliminary earnings release. After hours, shares of Starbucks down now by 3.3%. After the close of trading, Texas Instruments delivered a lackluster revenue forecast for the fourth quarter, fueling concern that demand is still sluggish after an industry glut. Some of the other stories that we're following turned out to be a mixed day for the U.S. stock market today. NASDAQ higher by 0.2%, S&P lower by 2 points, little change there. The NASDAQ Composite Index down up 33 points, up 0.2. The Dow down 6, also little changed. 10-year 4.20%, the 2-year 4.03%. Gold up $28 the ounce. Spot gold today up by 1%, and West Texas Intermediate crude up 2.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. Well, it's been a long-standing knock on the Democratic Party. Its national candidates might win more votes, but its state and local officials fall short in races that matter for everything from abortion access to certifying elections. New platforms like Oath and the States Project, which are backed by venture capitalists, are trying to change that by using a Moneyball style approach to political giving. That is what Bloomberg News Wealth Team reporter Amanda Gordon calls it in her new Bloomberg News piece. She joins us in the Bloomberg Interactive Brokers studio, and also joining us is Brian Derrick, co-founder of Oath, on Zoom in New York City. So I'm going to start with you, Amanda. What is a Moneyball style approach to political giving?
Well, it's looking where you can have the most impact based on looking at hundreds, thousands of data points. And that has to do with everything from which races could tip the majority in a state legislature to where the money will be best spent because the candidate is still underfunded. So when you go on to Oath with an impact score that they have for every candidate that they feature, you can see how much of their optimal funding they've reached. But that score itself is based on Oath's assessment and algorithms.
Okay, well, that's a perfect time for Brian Derrick to come in, co-founder of Oath. Talk to us about these scores, the algorithm. Where do you get the data that you use to present to folks?
Well, thank you so much for having me on. Most of our team are engineers and data analysts. Many do not come from the political space, although some of them do. And we are pulling in data from every available public source, things like expert forecasts, as well as public polling. And then we supplement that with data that we purchase, as well as our own internal analysis as far as how expensive each of these races is likely to be, how competitive the candidates really are based on the data that we have access to, looking at things like voter registration, past performance in the district, and so on and so forth.
So, Amanda, what took the Democrats so long? Because you write that major GOP donors have focused on these down ballot races for years now.
Well, this is not a brand new effort of Democrats. There are many groups that are making an effort to do this. But I think that the value was under-recognized, that a lot of power rests on the local level. And that was not really apparent until the Republican-controlled legislatures, until Republican-loaded school boards started making choices that brought alarm to Democrats.
So where are you actually seeing the money need to go right now, Brian? Like, what is the platform showing you? And then do the scores change based on if people give, if these candidates raise money?
Yes, the scores are updated in real time, including the donations that are actually moving on the Oath platform. So the more that, if a candidate has a $10,000 gap that we've identified, if donors come on to the platform and give $10,000 in that race, the score will change to reflect that. We see currently the greatest funding gaps in down ballot races for things like state Supreme Court seats, which often go pretty under the radar, as well as key state legislative seats that just the sheer amount of research that an individual donor has to do to figure out which race to fund is really cumbersome for most people. And so unless you have a tool like Oath, it's really hard to find where your dollars can actually have meaningful impact. So in state legislative races and courts especially.
Okay, that's helpful. Amanda, I want to send it over to you because you typically write about people who have a lot of money. That's your beat on the wealth team. Brian aims for the normal person. But I'm wondering if you're seeing the wealthiest donors out there use this type of data in order to decide where to deploy their money.
Well, that's what struck me about this area of encouraging political donations, because I've seen it in philanthropy. So for example, to throw back to something I was on radio a few years talking about, early childhood education was seen as an investment where you could have the greatest impact influencing a child's success academically if you go in and provide support when they're 2 or 3 years old. So here also we're seeing an intervention that can have really outsized impact. And what's interesting about what's happening with Oath and the States Project is that they're very committed to that grassroots donor and giving them a way to make a difference with their small dollars, but they're also seeing interest in a higher level donor. And at Oath, that's a fast growing segment where they give a little bit more hands-on advising.
Brian, what is traffic looking like on the Oath platform right now? Did it pick up after Kamala Harris entered the race? Do you expect it to pick up even more, I guess, in these next 2 weeks?
It has been up and to the right pretty consistently over the last few months, but we did see a huge jump in traffic after Vice President Harris announced her campaign, as well as when there are major headlines driving either fear about what Trump administration could look like or could mean for someone, or law coming out of a state legislature. Those types of events also precipitate higher traffic days for us, where people can really easily turn that motivation or that anxiety into a strategic action on the platform.
Brian, your focus is on Democrats. Who's better at this in general, though? Are Republicans better than Democrats at this?
I think that currently Democrats have a more challenging environment and a larger coordination problem, because there's just more grassroots donors on the Democratic side, and a larger percent of campaigns are funded by those grassroots donations, which just creates an information challenge. And that's the information challenge that Oath is trying to address. I think that there has been longer term coordination right of center, as Amanda already alluded to, that they've been investing in these down ballot seats for decades. And so there is a bit of catch up that we're trying to play, but I think that a technology like Oath could shorten the amount of time that it would be required to catch up.
That's Brian Derrick joining us from New York City. He's co-founder of Oath. He joins us remotely here in our studio. We have Bloomberg News Wealth team Amanda Gordon joining us in the Bloomberg Interactive Broker studio. Check out her story. It's on the Bloomberg terminal. Democratic donors deploy, quote, Moneyball strategy to tip local races. She talks about platforms like Oath, the States Project, doling out cash. GOP donors have focused on down ballot races for years. Democrats, as Brian said, getting caught up now. You're listening to and watching Bloomberg Business Week. Checking on shares of McDonald's in the after hours. Actually, they're just lower in the after hours. We're going to have an update a little bit later. This is Bloomberg Business Week.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Emily Grafeo in for Carol Masser. I'm Tim Stenivek. I'm taking a look at what's going on with shares of McDonald's. They're lower in the after hours right now, down by 9.5%. Shares fell after the U.S. CDC issued a food safety alert about an outbreak in the Mountain West that has been linked to McDonald's Quarter Pounders. 49 people from 10 states have gotten sick from the strain of E. coli. The CDC says, including 27 in Colorado. One older person in Colorado has died. The CDC says McDonald's removed fresh slivered onions, which are used primarily on Quarter Pounders and not other menu items, and Quarter Pound beef patties in several states.
McDonald's is working with investigation partners to determine what food ingredient made people sick. And we're also seeing shares in McDonald's suppliers Tyson Foods and Lamb Weston fall in the post market as well.
Lamb Weston does a lot of French fries. They do potatoes for McDonald's.
So, but this is linked to the Quarter Pounder.
Yeah, but it is. But if fewer people go to McDonald's as a result of news like this, we have to all think back to what happened with Jack in the Box, 30 years ago.
Yeah.
And the way that food safety issue tarnished that company's brand.
But Chipotle bounced back.
Chipotle did bounce back. So
we'll have to see.
Yeah.
McDonald's is a pretty big company that's been around for a while.
It is, but shares just getting punished in the after hours. Let's talk about what's going on with Starbucks. Shares of Starbucks are also lower in the after hours. This after the company, down by 3.4%. This after the company pulled guidance for 2025 after sales plunged for a third consecutive quarter, calling attention to the scope of the problems facing new CEO Brian Niccol.
So Bloomberg TV's Romaine Bostick had an interesting point on this when we were talking about our TV friends during the simulcast, that maybe this is the new CEO just kind of pulling the guidance and saying, I'm going in, I'm working, let me work in peace. We're just going to suspend guidance right now. Nothing, I guess, to be too alarmed about, but we did see the shares fall. I think it was 10%.
3.5% is where they're down now.
Right.
The coffee chain did report a 7% decline in same-store sales in the fourth quarter that ended September 29th. According to that preliminary release, the weakness was especially evident in the U.S., where transactions were down 10% from the prior year, and in China, where comp sales fell 14%.
And they also said, withdrawing guidance for the current fiscal year will give Niccol an opportunity to assess the business and solidify a turnaround plan.
Okay. What else are you... what do you have your eye on? You were writing some stories today.
Well,
that's your other job.
Yes. My other job is trying to make sense of what is driving the market on any given day.
How you doing
and week.
on that?
And then I'll call, an expert investor, portfolio manager who's been working on Wall Street for 30 years, and they'll say, Emily, no one knows. We can't really figure out what's going on. But my colleague Isabel Lee and I wrote a story trying to make sense of why the S&P 500 had its best win streak all year. On Friday, it capped 6 straight weeks of gains, which was a record that we hadn't seen that much, positive gains in the S&P since 2023. And it kind of came down to this idea that the economy is strong and resilient. We had really good labor market data last week. The retail sales were strong. And so while one could kind of string a narrative together that, this is the Trump trade, traders getting excited about some political messaging. At the end of the day, when you look at just the last 6 weeks, we kind of piece together that it's the economy, which is kind of simple. And then we interviewed a few people who are now more bullish on the markets.
Yeah, one of the names in your piece that's familiar to me is Nancy Tangler. She joins us quite a bit.
Mm-hmm.
She oversees $1.4 billion over at Laffer Tangler Investments. Based in Scottsdale, Arizona, she sometimes joins us here in New York or from Reno, Nevada. She's convinced that corporate earnings growth is greater than it seems thanks to a steep fall off in inflation that's also bolstering consumers. She's getting clients out of treasuries and into a broader list of bets on munis, electrical equipment makers, and on utilities.
She said the growth is still there. It's still driven by the consumer. And this, of course, we were interviewing her right after the retail sales last week, which were better than expected. She said, we are very bullish. And so we wrote this story on Friday, and then we come in Monday morning, and David Costin from Goldman Sachs has a note saying that the S&P 500 is going to, fall.
But you said there's another note out there that kind of throws
Yes,
you know,
JP Morgan.
a different thing at it.
Yeah, exactly. So I guess people can prescribe to whatever narrative
Look,
they
Carol
want.
says it all the time. It's what makes a market.
Exactly. There was another, we also interviewed Phil Camporale, who I believe comes on Bloomberg TV and radio quite a bit as well.
He's over at JP Morgan
He's
Asset
over at
Management?
JP Morgan Asset Management. So different from the sell side that publishes that research, but he was bullish as well. He said he was basically overweight stocks all year, and now he's adding to emerging markets. Basically like